All right. Good morning, guys, and welcome to a new case study. It's been a while. Back on the charts, as I said, I had to make it's taking some time to get back into it. Also, taking my time with my setups. So only when I see setups, I'm taking them. I still have to get used to journaling again. Haven't done that in a while. So I have to actually still journal this trade and completely renew my journal actually, because it's quite outdated. Um, just make like a 2024 journal. Anyway, we're here, we're back, and let's dive into this trade and let's start at the daily time frame. We can even do it at the weekly, but it's not necessary. So, ideas behind this trade. We can see that we have a strong push to the downside, which is actually not really in the good for a trade because it has a strong closure as well. However, coming into the new day, we see that. Can you see it? Okay, see it. There we go. So with that push to the downside, we first of all got below all lows. We now properly break structure to the downside on this light blue structure. And therefore, with that, we also take out previous weekly lows. And coming into uh, into Wednesday, we take out that Tuesday low. So already three confluences. We are below old lows structure-wise. So below old lows means looking for a potential accumulation. Then we are below previous weekly lows and internally structure below that as well. And then in addition to that, we took previous daily lows. Now to add to that, we also took Asia lows. So we got four lows being taken out. Our structure low, our weekly low, our daily low, and our Asian session low. To add to that as well, we have a potential high time for PY sitting over there. And with the idea that this was just a little liquidity grab, I was like, okay, this might be a strong PY where we could see a move from actually demand zone and inside that we have a PY. So high time frame wise, we already have enough reasons to look for long trades. Then going down lower, what can we see? Again, price started to form bullish structure, broke bearish during that New York and Tuesday CPY. And then we started to slow down. What happened when we slow down? We got a high, we got a low, a lower high, a potential lower low. But more importantly, we started to build up structure, liquidity. We had pre-London highs, Asia high already been taken out. Then we took Asia low, and actually during the end of the session, around the end of the session, only this trade occurred. Um, so yeah, sell side liquidity taken, and we can now zoom into the 5 minute. And what can we see here is that I always want to see a early buyers on the way down, and we can see that we have a high, a low, a lower high, a lower low, followed by a bullish break, then a bearish break. So this is our early buyers inducement before taking the Asia lows as well. So that's nice. People thinking that the Asia low will stand strong, so to say, get taken out. Uh, sorry. Then we can further zoom in. This is where we hit TP. So you can further zoom into the 1 minute and we can add even more to it. So we have the early buyers. We got previous daily lows being taken out. And actually, as soon as we take that low, we got our first bullish move. So people think like, all right, lows taken, we might turn around. And then we got the slow down, followed by an impulse. So we have early sellers, then we have a high, a low, a lower high, a lower low, a lower high, and a lower low. Bullish break on the 1 minute. Get that back, we get back down, then we form a higher high. So now we have a sort of internal range liquidity that it's being taken out. Price trickles down. We get first we get missed, then we get tapped in. Price actually gets quite deep into the block, but yeah, it doesn't matter. Um, one pip breathing room on the entry. I actually did one too much, a little bit too much. Oh no, perfect. One pip breathing room, one pip breathing room on the entry, 0.5 pip on the exit. And we get tapped in there, as you can see. Move to the upside, minor break already reducing our stop loss. Why? With a high, a low, a lower high, a lower low. Minor break, reducing stop loss. And this was actually where I wanted to go break even. So could either do it here, but because this was super slow, I would rather go break even slightly earlier, mitigating my or minimalizing my risk of losing a trade. Trading is not just mechanical, it's doing what you see a lot as well. Mechanical entry drill and then do what you know what might happen. Usually, or watch, usually when this happens, I know that, okay, all right, we got tapped in and price is not showing any bullish uh intent. It's not showing any bullish intent. So usually I will either go out here, but you've got to wait. So there's nothing wrong with going out here unless it's not in your plan. But I know that it happens a lot of times when prices like this is 9:18. It's more than 2 hours inside that. It's around our entry. So that's indicating that this should be a potential. Why does this why it's such a thing for me is this should be an area where orders laid, right? So it should be an area where momentum should kick in and it didn't. So that's for me a reason why you could go break even here and just leave it. Or when it pushes away, say, okay, I'm leaving it. I reduced it, got lucky. I'll put it at 9T6 and then move to the upside, TP at 1 to 4, or actually just below 1 to 4, 3.94, but essentially at that high, first liquidity high, and then final TP is at that high, a nice 1 to 5.6 trade. There you go. And that's it. Clean trade, straightforward. Lows being taken, Asia lows being taken, early buyers, entry to represent itself, and we got the move essentially. Also, usually doesn't take that long to be in a trade. So yeah, that's it. Let me know what you think. I'll now head into the pre-market analysis for today, and good luck. Peace out.